Is this the week that Apple finally found its footing? Let's ask Erik Woodring. He is Morgan Stanley's Apple analyst. He is with us at Post 9 for his first TV reaction to that report. Good to see you.
Good to see you.
Welcome back. So I look at your notes today. You say, quote, it's hard to not be more bullish on Apple here. Why so?
Sure. So I think the risk ultimately coming into earnings was a fear of a guide down. We actually got a guide up. So we move past the June quarter guide now, and we look at the developer conference upcoming, the iPhone launch coming later in September. This is historically when when Apple outperforms, yet we've seen the stock start the year as one of the biggest underperformance years in the last decade. So there's a bit of a catch-up trade. The risk is behind us. Estimates seem de-risked, and there's a reason to be excited about the future.
Wow. The revenue decline,
yes.
Okay, the fifth time in 6 quarters that we've seen that. What reverses it, and why doesn't that trouble you more?
Sure. So there's the good and the bad. Let's take the good first, which is services, right? Services growth outperformed 14%, very consistent, all-time record revenue, and record gross margins. On the other side, the product business is still relatively weak. iPhone declining 10% year over year, the total product business down 8%. There's still work to do in what I'd call an uneven consumer environment, but what Mr. Market cares about is what's ahead of us, not what's behind us. Ultimately, it still does come down primarily to the iPhone. That's where the AI narrative really becomes weaved into. And obviously, I assume we'll get into this, but that's where we are more bullish as we look forward.
Because of the AI narrative and the AI playing into an iPhone refresh cycle, which has been stalled?
Right, exactly. The opportunity to refresh an aged install base at a time when there's concerns that Apple has gone X growth, introducing this new technology for the first time. Again, that is ultimately can be a catalyst in our mind to drive that refresh cycle, re-accelerate growth.
Why do you think the refresh cycle has been as disappointing as it's been?
Sure. So, again, over the last, let's call it decade since the iPhone was launched in 2017, I think the innovation curve has looked very different. It's flattened over time. The early days of the smartphone market saw very significant upgrades. What we see now are maybe more subtle upgrades, maybe some of them even in the guts of the phone, right? Apple Silicon is a big powerhouse recently. Mm-hmm. So ultimately, what Apple needs to do is, one, introduce new innovation. AI can be that catalyst. But two, ultimately, we are still in a very uneven demand environment. Concerns about rates, concerns about the economy, concerns about where jobs might be going. If there's something to look forward to in the future in terms of rate cuts, there could be more confidence from the consumer to say, hey, maybe I'm willing to spend a little bit more in the future.
I'm glad you mentioned innovation, because the critics today, mm-hmm. And there are a few.
Yeah, of course.
And the snark is about innovation and the lack thereof in those folks' mind, and say the most innovative thing that they're doing now is the massive buyback.
Right.
And that this is a financial engineering story, not an innovation story, and that nothing material has changed.
Right.
Now, you've probably heard the same criticism today around the way. Right. How do you respond to that?
Well, listen, let's take both of them separately. Apple announced the incremental $110 billion buyback authorization, biggest in company history. They are effectively generating...
It's funny that we call that incremental.
I know. But they are generating too much cash, mm-hmm. a good problem to have, and they're going to return more of that to shareholders via buybacks. That doesn't mean that they aren't investing. Look at their R&D. They're going to spend about $31 billion in R&D this year. How much does Microsoft spend? $31 billion. How much does Google spend? $35 billion. To say that they aren't innovating, I just think is not necessarily seeing the forest of the trees. They have a different business model than many of their other mega cap tech peers, and I just think that sometimes maybe that gets lost in conversation. Apple doesn't need to invest in a massive cloud business that is more profitable at scale. What they need to do is leverage their existing device base, provide new features to their consumers, and just drive that catalyst engine. Again, record installed base across geos and categories entering the June quarter. All of this becomes very important when it comes to R&D, and ultimately, I do think that they're ultimately spending. They are innovating. It just looks different than it once did.